Hello, welcome to Access to Justice, brought to you by Northwestern Legal Services. My name is Bob Oakley, host of the program today. Today we'll be looking at something very interesting, and it's very seasonal. It's getting to be winter, it's getting to be cold, snow, but what else does that mean? It brings thoughts of not just sugar plums, but thoughts of tax deductions. What's better than that? A tax credit. What's better than that? A tax refund. So our guest today is Diana Smith from the Internal Revenue Service. Welcome.
Thank you, Bob.
We're going to talk about things that will touch many people out there, and it's called the Earned Income Tax Credit. It used to be called the Low Income Tax Credit. Now it's called Earned Income Tax Credit. There's quite a history to it, but I would ask all of the people in our viewers to pay attention, because so many people are eligible for this low income tax credit, earned income tax credit, and don't take advantage of it. So, Diana, maybe you could tell us a little bit about the origins or the history of the Earned Income Tax Credit.
Sure. The Earned Income Tax Credit was approved by Congress in 1975, and we refer to it, at the IRS, we being the IRS, refer to it as the EITC or EIC. We like acronyms, and that's a lot quicker to say than the full words. So it is, what a lot of people don't know, it's the nation's largest anti-poverty program. And it's a tax benefit. It's for working people with low to moderate income. It supplements their wages, it reduces their tax burden, and it provides a work incentive. With the words earned income being the key words of the program, you do have to work in order to get any benefit from this credit.
And this has come about, but there is an interesting statistic that many people, for one reason or another, don't apply for it, but would be eligible for it.
Right. GAO, the Government Accounting Office, has estimated that about 25% of Americans who are eligible for the Earned Income Tax Credit do not take advantage of it. And many times it's a case of people not knowing, or it's a case where the person doesn't have a filing requirement, so they don't file the return. But even though they don't have a filing requirement, it may be to their benefit to file anyway, so they can take advantage of the Earned Income Tax Credit.
We'll talk about who has to file later, but it is important to know that, at least for purposes of the Earned Income Tax Credit, you must file to get it.
That's correct.
And the other issue that some people may just think they're not eligible because they're working, or that they feel that they earn too much.
Correct, and also the other benefits that they receive as well. A lot of people think that, because they receive public assistance or if they receive TANF, that makes them ineligible, and that does not. Those benefits are not considered when taking into consideration the Earned Income Tax Credit, just their earnings. And same goes the opposite way when they're applying for SSI benefits and food stamps. The fact that they get the Earned Income Tax Credit has no bearing on those as well.
So it would not negatively affect any benefit.
Right, that's correct, right.
That is important to know, because a lot of people do worry about that whole issue. So let's talk a little bit then about the requirements or the touchstones one has to meet to be eligible to receive an Earned Income Tax Credit.
Sure. As we've touched already, the numero uno is the earned income. And not every person who has earned income is eligible for it. There are income limits. And some of the limits are, we'll go down through whether it's based on whether you have a qualifying child or not. And first is the limit.
Before we get to that, though, when you mention something like qualifying child, and we've talked about that before, but what is a qualifying child? Because if people are going to think about this, they're going to think of their own situation. What is it?
Right. A qualifying child would be a son, daughter, a grandchild, brother, sister, adopted son or a daughter, as well as I think that's it off the top of my head.
And it's somebody that they actually have legal custody.
Right. Legal custody, living in the home with them.
Okay. And what about ages?
Ages, it's age 19
or less.
Or less, and then age 24 or less if the qualifying child is a full-time student, and then if the child is disabled, it's lifetime.
Okay, so now we know what the qualifying child is, and the income limits you were going to tell us that someone has to make below earned income.
Earned income, and that would be what we go by the adjusted gross income. And
Okay, now you're going to have to explain that.
okay, the adjusted gross income you find that on the first page of a 1040 or 1040A, and that would be your total income minus your adjustments. And at the bottom line of the 1040 and 1040A is the adjusted gross income line. And again, it's income minus adjustments.
What kind of things, what are examples of the adjustments?
The adjustments would be the tuition and fees, the educator credit, student loan interest credit, alimony. Those are the types of adjustments that come off of the income, total income.
And so then one has to look at that, not the total income. They have to look at the adjusted gross income, and those limits are?
The limits are $37,783. That would be with 2 qualifying children, and it's a little higher if you're filing married, filing joint. It's $39,783. And then if you have 1 qualifying child, it's $33,241, and then married, filing joint, it would be $35,241. And many people mistakenly think that the earned income tax credit is just for people with children, and it is not. It's also for people who have lower income and do not have any children at all. And the adjusted gross income for those people is $12,590 or $14,590 for married, filing joint, and no children.
So a good rule of thumb, then, I think we could back up a little bit for people, that if your adjusted gross income is under $40,000 a year, you need to give some serious thought to whether you're eligible for an earned income tax credit.
That's great advice, and the first step they can take is locating last year's return and taking a look, and that will give you a general idea as to where you stand as far as falling under the earned income tax credit limits. If you look at your tax return filed last year, 1, look at the bottom line of page 1 to see what your adjusted gross income was, and then 2, look on the back to make sure if you did receive the earned income tax credit. And if you did not and believe maybe you were eligible last year, you need to look into completing a 1040X and having that tax return amended.
1040X is just revisiting your prior year,
right,
and as many as 3 years back.
Right, that's correct.
Now, again, though, the limits that you've given us, the exact limits,
right,
have changed from year to year, don't
yes,
they?
And those are the 2000 figures that I gave you, 2007 figures that I gave you.
Okay. For the filing that
right,
you make in this coming
2008.
year.
Very confusing.
It is. But again, you couldn't rely on these figures if you were going to amend prior year's tax.
No, last year's figures were about $1,000 or so less than this.
Okay.